Today I'm going to talk about two of my favorite patterns for getting aboard established trends, and they truly are two of my absolute favorite patterns for doing just that. Before we do get into that, there's a disclaimer screen. You can go read it on my website if you want. The short version is all predictions are about the future, and a lot of stuff can happen between now and then. I'm not going to bore you too much. Pretty much what Reed said. I've been around for a while. So I won't bore you too much with my bio. If you want a complete bio, which is actually even more lengthy than a few things that Reed mentioned, you can go to my website. But you're probably more interested in the methodology than me. I know I would be. So first of all, it's not my way or the highway. If you're already successful in what you're doing, then take some pieces of what I do, maybe like Dave a la carte, and add that layer to your trading. And I think although my methodology is very simple, I've had the luxury of working with some people who are a lot more advanced than I am, some PhDs, some brainiacs and all, and even some of these simple concepts that I think everyone knows. To my surprise, they'll see them and say, Dave, this is kind of an interesting concept you're onto here. I think I could use this. So I've been flattered with that. So again, it's not my way or the highway. If you have your own ways of doing things, do them. I just want to highlight a couple of these because I've covered this slide a million times. I think first of all, there's no secrets and there's no proprietary indicators, so everything I do is fully disclosed. It's not a get-rich-quick scheme. There will be some losses. That's one of the few things I can guarantee. And the way you win and the way you do quite well is you survive the bad times relatively unscathed through proper money management and good stock selection. And you do really well in a good time. So you kind of go through, I hate to say it, but you kind of go through this print money phase and the market is doing really well. I did a webinar earlier today. We were kind of talking about that. And the problem that most people have is they'll come into a trend following type of methodology. Market will get choppy like we saw over the last 3 or 4 months, and then they'll give up. And now, what's happening now? Well, the market's trending very nicely. So many people give up right before that trend starts. So it does take a little while. One thing I do want to point out is that there is a repeatability to what I do. You should be able to take the patterns you learned today and go out and find them in the actual markets. I'm even going to show you a live example here in a few minutes. In repeatability, I never thought about how important it was until I started talking about it in webinars, and people have contacted me since and said, you know, there's this guy, and he's throwing out all these signals, but it seems like by the time I get the signal, he's already getting out, and that can create a lot of frustration. Or there's other people that are in and out 50 times a day, and you end up chasing your own tail trying to follow them. If I give out a signal, you should have ample enough time to get in, and I'll get in after you. I'll let it trigger, good trigger, before you even consider getting into it. And then also it might take 2 or 3 days to trigger, or it might not even trigger. Now, if you're doing your own homework, same thing. You should be able to see these things. You should be able to get into them, into these charts, into these patterns without any question once you learn to recognize the pattern. So it's very repeatable. If you're following me directly through a trading service, it's a no-brainer. You should be able to get in at the prices I recommend. You should be able to set your stop at the price, and you should be able to take partial profits at the price a trail stop higher. I'm going to get asked this, so I might as well cover it right now real quick. I prefer daily stock charts, but it does work in all markets, and it does work in all time frames, okay? I've had people contact me before that tell me they're doing quite well trading one of my patterns in the E-minis on an intraday time frame. Now, I did a whole presentation just on market efficiency and inefficiency, and then I covered it in a lot more detail in a course that I did on stock selection. The bottom line is I think you're better off trading stocks because there's a chance for you to capture that inefficiency. Now, every now and then, an inefficient market can make a nice move. For instance, Jeffrey was just talking about being long USO. I agree with him. We too are long USO right now because I think it's getting ready to make a very inefficient type of move. But as a general statement, I prefer finding that little biotech stock or a little solar stock or some kind of technology stock that has the potential to make a large move, a large inefficient move. It is hard work. One of the things I received on Amazon was it's too much work. Well, if you want to be successful in this business, guess what? You're going to have to work at it. If you want to be a doctor, you're going to have to work at it. If you want to be a lawyer, you're going to have to work at it. If you want to be an automatic transmission mechanic, you're going to have to work at it. Well, trading is no different. It looks kind of easy on the surface, and some of these patterns are kind of easy to recognize, but you're going to have to sift through a lot of charts and learn how to read charts in the process. And the main thing we're doing here, and we're not going to be able to get into it too much today about money management, but we're trying to minimize losses, and we're trying to allow for the occasional home run. And that's where the real money is. So let me just show you the methodology real quick in our nutshell. First of all, we're looking for, as a general statement, a strong trend. We also have some emerging trend patterns. Today we're going to focus mostly on established trends. And then we're looking for a pullback in that trend. We're looking to get long if and only if the trend resumes. If a market begins to rally, it doesn't trigger, we avoid the trade. We avoid a lot of losing trades simply by waiting for the entry. The entry usually is a little bit higher than I have here. This is kind of a textbook entry, but you get the idea. If it does begin to work, we're going to take partial profits, okay, and we're going to trail that stop higher. And we'll get the stop up to break even once we take partial profits. And then, this is where the real money is, we change hats from being a swing trader to a longer-term trader by simply allowing these stops to loosen up. Now, early in the process, they stair-step up almost on a one-for-one basis with price. And then as price begins to accelerate higher, if we do things right, it will, then we allow that stop to widen out to hopefully capture a longer-term trend. Now, I don't want to get into it too much, but basically your real money is in your longer-term trends, but you can only predict the short-term when it comes to markets. If you're trading long-term only, your drawdowns will be abysmal, and we all hear about these famous long-term traders who make a bunch of money in a bull market or some sort of bull market. And what you fail to realize is many of them blow up, subsequently blow up. So if you get bored, maybe poke around the internet, and I think you'll see what I mean pretty quickly. Now, let me just briefly mention the three phases of trend. We have trend resumption, which is your generic pullbacks, and two of the patterns we could talk about today. We have trend acceleration, which you can combine in with trend resumption and makes for a pretty good trade. But trend acceleration is when a market is kind of bumping along and then it begins to accelerate higher, and you're looking to play some sort of pullback-related pattern. Then you have an emerging trend pattern, like Jeffrey pointed out earlier, with oil bottoming out. The USO would now be a current emerging trend pattern. It is a stock we're long. We're also long gold stock. It hasn't done much lately because, like any other commodity or any other efficient market, sometimes it takes a while to get going, but that's okay. Now, you also can have no trend, and this is where many people forget. I often preach it's an uptrend, a downtrend, or a sideways trend. Now, if it's an uptrend or a downtrend, obviously you have these three phases of trend. And the fourth phase of trend would be no trend or sideways trend. Now, this is a big duh, you're probably thinking, but you'd be surprised at how many people send me charts and say, hey, Dave, I'm thinking about buying this stock, and it's going absolutely sideways. Real quick, there's a few things to look for when looking for stocks. My voice is a little crackly. I've just got back from Italy, and it's been a long trip, so I've kind of worn out my voice speaking both there, and then I spoke about an hour and a half this morning. So my apologies on that, but just got to bear with me. I kind of sound like Peter Brady when his voice began to crack, or whatever Brady that was. But anyway, we're looking for gaps and laps in the direction of the trend, wide range bars. We're looking for net price changes. In other words, where's the price today? Where's the price today? Where's the price today, or lower or about the same? This is a very important concept. Usually I spend quite a bit of time talking about this. Quite often somebody will email me again and say, hey, Dave, what do you think about this stock? And it might look like it might look like this longer term, but if you go back about a month in time, it hasn't made any forward progress. So that's one has to wonder, has this trend begun or is beginning to end? We look for strong closes, meaning that if you have a price bar, the close is up towards the top of the range. We're looking for acceleration, base breakouts, and then boxes on top of boxes, or stair stepping, meaning that a box on top of a box is that you're looking for a stock that comes up, consolidates, and then comes up, and then consolidates. It just keeps working its way higher, or ideally it stair steps higher. It looks like this, okay? These boxes, a lot of times the positions we'll get into will make these boxes on top of boxes, and that's beautiful. And if they've demonstrated they've done that in the past, that's a good characteristic to look for. If you haven't read Darvis's book, and I have a link on my website, davelandry.com, if you need it, under books to read. But Nicholas Darvish wrote a book. It sounds kind of quirky. It's How I Made $2 Million in the Stock Market, but it's a good book to read, especially if you haven't really wrapped your head around or if you're not convinced that technical analysis works. Now, it doesn't work in such a beautiful fashion nowadays as the way that Darvish traded it, but he traded these boxes, so to speak, and that's sort of what I'm seeing with these, what I call the box stocks. And also moving averages, there's three characteristics of moving averages that are very useful. One is the slope, one is the order and or the crossings of the moving average, and one is daylight. I don't use any indicators other than the occasional moving average. Right before this show, I went through about 2,000 stocks, and I just flipped through them, but I didn't put one indicator on all of those stocks. I'm just not a big fan of using indicators due to the amount of lag. I feel that a lot of people who use indicators, I'm not saying they're hiding behind them, but I know some really good technicians, and they'll show you the indicators, and you'll, like if I point out something going on in an indicator, they'll say, well, I just don't like the chart. So I think that they're good chart readers to begin with, those who are successful with indicators. To each his own. I keep it simple. Keep in mind that 15, 20 years ago, I spent a lot of time using a lot of indicators on the chart, and then to a point where I couldn't see the chart anymore. And I talk about this in a webinar I do called a Trader's Journey. I think there's various copies of it out there on YouTube. So if you get a chance, it's either in my channel or one of my likes if you want to watch that. But I think we all sort of go through this Trader's Journey where we go through the complex of the arcade, and then we kind of reach a point of enlightenment. It's kind of like when you reach the beginning, the true enlightenment comes. And I think that's what happens with a lot of people, present company included. So I try to keep things really simple. One of the most important concepts, we're going to talk quite a bit about this in just a few minutes, but one of the most important concepts is persistency. If you don't walk away with anything today, walk away with the fact that, or if this is the only thing you walk away with, that persistency in the market is very, very important. Now, mathematically, it's equivalent to linear regression to those engineering types out there who want to poke around a little bit with it. But as far as I'm concerned, I just like to draw a line through as many bars as possible. So a normal trend line, which you'll see in a few minutes drawn under the bars too. A normal trend line would be drawn under the bars like this. But if you're looking for persistency, you want to draw a line through the bars. Now, with a little experience, you should be able to eyeball persistency in charts. Now, it's not as common. I'll just have one example on the downside. It's an older example. It's not as common on the downside because usually when a market begins to fall apart, it does something like this because everybody tends to eventually rush to the door. But it can still be useful on the downside. And what happens on the downside is that you get a bit of a Chinese water torture. It goes down day after day after day after day, and then finally everybody rushes in and throws in a towel. So if you do see a persistent pullback, or persistent, which we'll get to in a minute, persistent pullback on the downside, it can be worth trading. So real quick, I just want to show you some trend characteristics. Right here, obviously at point A, there is no trend. The stock is just going sideways. Right here, we have a base breakout. Notice that we have a wide range bar. The bars are getting wider, okay, meaning that there's some volatility coming into the market, there's some excitement coming into the market, and notice that it's beginning to close towards the top of its range. This means that people are buying the stock into the close. Also notice that over a short period of time, the persistency is beginning to manifest in this particular stock. And then notice that you have some gaps along the way, okay? And again, you have strong closes. And then towards the end of this trend, it kind of ends in a bang. And this is why I love this example, because it takes off and then it ends with a bang. You do have a gap higher here. It does begin to take off. By the end of the day, the stock is all the way back here, and it has a trend qualifier in the opposite direction. It has a poor close. And then notice that after it has a very brief pullback in here, this is the pattern I call the first thrust. This is an emerging trend pattern. This is a little bit more advanced than Dave Landry 101, but it is a good pattern to trade. It triggers a short at this point, and then it begins to implode. And this stock no longer exists, so if you go out and look for it, it's because it went bankrupt out of that pattern. Now, daylight and slope are two very positive concepts when it comes to markets. I do attend a lot of presentations, or a few presentations, I should say, on technical analysis, and a lot of times I'll see people up and presenting with a bunch of different signals: buy, sell, buy, sell, buy, sell. They'll have like a dozen signals up on one screen within a trend, and if you just kind of, not to pick on these people, but if you just kind of look at it, you look for daylight, meaning the low of the bar is greater than the moving average, many times just daylight alone can keep you in a pretty good trend. Notice that we just have one little kiss of the moving average, and that's actually a tradable pattern in and of itself. And then this entire trend is contained by the moving average, okay? And then notice that the stock breaks below it, and now we have daylight on the downside. Slope is also a good thing. This is just a 10-day simple, really simple moving average, okay? And then bow ties are another favorite way of mine to detect trend. I don't use them as much for trend, though. I just kind of eyeball a chart. I should say bow tie is my favorite way to detect a change and trend. But there is some lag in moving averages, so be careful. But again, we have daylight here. Also notice that the 10-day is greater than the 20-day, and the 20-day is greater than the 30-day. These are 20-day EMA, and this is a 30-day EMA. Now, notice that the moving averages are kind of slow to catch up with price, okay? The exponentials do a little bit better job because as soon as the price goes through an exponential moving average, it will turn. And that is something that I learned by accident, and then was later confirmed maybe 15 years later by a speech given by Greg Morris. I think most of you probably know who that is. And if you could see that the moving averages have begun to turn, but by the time they've begun to turn, this market has already lost about 50% of its value. So you want to look at price first and then throw in a moving average just for fun. Okay. If you ever lose your way in the market, send me a self-addressed stamped envelope, and I'll give you my address in a second here. And I'll send you a business card. On the back of my card, I had printed uptrend, downtrend, and no trend. So keep it simple. The market should be an obvious trend, or it should be an obvious emerging trend before you think about trading. Now, I'm not a big fan of reversion to the mean trading, but somebody pointed out to me that in trading a pullback, I am trading reversion to the mean. I'm looking for a market to get oversold, and that is true, but I'm trading it with trend. So I'm looking for a pop back to overbought and hopefully take a partial profit at that point, and then trail a stop higher again to hopefully capture a longer-term gain. And again, that's where the real money is. So let's talk about two of my favorite trend resumption patterns now that we covered trend. TKO is one of the greatest things I think I've discovered. I discovered in the 90s. You look for a market that has a nice trend. In fact, a persistent trend is my favorite. And you look for a big wide range bar down. And it has to take out at least two prior bars, but ideally you want it to take out more than that. And what happens is this attracts eager shorts. It knocks out the nervous long. So you ever get long a market then get knocked out because somebody dumped on your position? Trust me, it happens. Spell with a SH, silent SH, okay? And the good thing is, if the market begins to resume its uptrend, then those traders have the predicament of having to get back in the market or risk being left behind, and those eager shorts are forced to cover. And the predicament of both of these traders can propel your position higher. So again, you want a strong trend, you want a sharp sell-off, you want to go long above the sharp sell-off, and sometimes if the bar is wide enough, you can trade them in a textbook fashion. This is a chart I zoomed in on. You'll see the chart in just 1 second. But this is a longer-term trend, so it doesn't really show it back here. But this is a very long trend when you go back in time. Notice you have the wide range bar down. Takes out 1, 2, actually 3, 4, 5 bars. So it takes out a whole week's worth of trading. And in a case like this, sometimes you can enter right above the high and put a stop in right below the low. And again, that's trading in more of a textbook kind of fashion. There's only a couple of patterns you can trade in a more textbook way, and TKO is one of them. Now, notice that this is a very persistent move higher. We'll probably beat this chart up a little bit more in a few more slides. And then notice you have the knockout move within the chart. Now, again, you want this bar ideally here to be a wide range bar down, and you want a significant amount of trading to be taken out. In this particular case, you had 4 trading days that were taken out. And in the case when you got a nice little wide bar like this, you would look to get long somewhere above the high, give it a little rub, and maybe put a stop in somewhere below the low, just in case you're wrong. Here I have it zoomed in. This is a bit of an extreme example. And I remember when we took this trade, this was on my trading service. It was a little bit, it was on the cusp of almost being too extreme, but I very much liked the setup because, one, notice you had a gradual uptrend here that began to accelerate higher. And not only did it accelerate higher, but it also became a persistent uptrend here. And then you had a nice little knockout move, okay? I think on this day is some kind of news event. The whole world rushed to jump out of the stock. At the end of the day, some people were thinking, well, maybe it's not that bad. And the fact that this stock recovered to close well off its lows made me think that, you know what, I think a lot of people just got shaken out of this stock, and I think it might be worth a trade. Now, a couple of notes on the TKO, and before we get into persistent pullbacks, it can be a very common pattern if you follow in a textbook, okay? The textbook in that only a 2-bar low, so make sure you have a wide range move down. Make sure that knockout bar is meaningful. A good litmus test is ask yourself, if I were long this market, would I have been stopped out? And quite often throughout history, we've been knocked out of positions and it's strong trends. And I'll look at the market that night. You know, you cuss and fuss a little bit because you got mad because you got knocked down. But then the next day, we will look to actually get back in that same exact market because we'll have that knockout move, takes out our stop. Okay, so we're kind of the aforementioned traders I talked about that got knocked out. But we're smart enough to know, hey, we'll get back in. No problem, okay? So you want to search for the strongest and ideally persistent trends, and that's going to be our next topic is persistent pullbacks, okay? And one thing good about TKOs, they can be really good doing a blow-off kind of move. So that means that sometimes you get these moves that begin going higher, accelerating higher, look like this, and you get that TKO move where everybody and their brother thinks, okay, it's done, let's short this market, let's get the freak out of this market, and then what happens? If that TKO triggers, this market will take off and go straight up again. I saw Ed Sekoda speak recently at the American Association of Professional Technical Analysts meeting, AAPTA. Well, it wasn't that recently. I guess it's almost a year ago. Anyway, he said that we could be entering a period of reoccurring bubbles based on a very complex thing, the government actions and so on and so forth. So I'm just kind of taking that as face value because I've seen quite a few bubbles, and bubbles are wonderful as traders. And a TKO, if you miss the initial move, is a great way to get into a bubble. I think maybe oil could be the next bubble, and these emerging trend patterns that are getting us long right now in the oils could get us into that bubble really early. Now let's take a look at the persistent pullback pattern. So again, it should be a fairly sizable trend, ideally about 20 days or more. 20 days is 1 month's worth of trading. Now, one thing I seem to be noticing in more recent times, and this is the beauty of doing these presentations like this, I tend to, through teaching it, I learn it even better myself. So from a selfish standpoint, that's why I love getting out in front of people. And I noticed the importance of it when I was just recently speaking in Italy, that even short-term persistency can be very good. But for this pattern in and of itself, you want about 20 days. But if you're looking at some sort of generic pullback or TKO or something, keep an eye on that shorter-term persistency. Right now, for instance, the NASDAQ has a shorter-term persistency developing that looks pretty good. So it's worth keeping an eye on. And then you look to trade a pullback, and then the best pattern would be a TKO with the persistent pullback, and ideally with some acceleration. So again, we're looking for about 20 days. And also, you want this move to be fairly sizable, okay, based on the underlying volatility of the market. So in this particular case, we had a pretty good run in this stock, and then it pulls back, and then you look to get long as that trend resumes. So it should be a very easy pattern to recognize. If a chart looks like this, then it's not a persistent trend, and you should avoid it, okay? So let's take a look again at the prior example. Notice that it's actually about 3 of my patterns. It's one called what I call accelerating momentum strategy, where you're looking for a gradual uptrend to accelerate higher. 2, you can see that there's a nice persistency in this move higher, so it's a persistent trend. And 3, you have a trend knockout within that persistent trend. So if you combine the persistency with the trend knockout, it can make for a very powerful trade. And this was an actual recommendation in case you want to see the actual recommendation on the stock. I just did a cut and paste from the spreadsheet. But you can see the entry was at 11, and then it ran up to 27.80, and there was a 16.8 16.8 point profit. So it's actually much higher in here, and I think it stopped out at about a 150 or 160 gain. They don't all work this well, but when you see a combination of acceleration higher, persistency, combined with that TKO, sometimes you could really get a very powerful trade. And this is what a longer-term trailing stop. We don't have enough time to get into money management, although I'll touch upon it in a second. But this is what a longer-term trailing stop looks like. You allow that stop to slowly widen out. This is what I call an arbalist TKO. I was looking for a name for it. I did a little poking around the internet. And an arbalist is like a crossbow times 10. It's a medieval weapon. And sometimes when you get that, when the market shoots higher and then has this big knockout move right afterwards, it can lead to a very powerful move. But again, take a look at this stock. You got a fairly persistent trend in here, okay? You got an accelerating trend, and you got a knockout move here. Here's an example of a persistent pullback on the downside. Again, they don't happen very often on a downside, but when they do, they can work quite well. Again, it's kind of like a Chinese water torch. It goes down day after day after day after day. And usually, people throw in the towel. In this particular case, it just kind of persisted on lower, which made for an okay trade, although it didn't completely implode, like I'm saying here. Okay, now you're probably thinking, okay, Dave, those are some great examples, some from last year and some from even further back. Show me a current example. Well, this is one that coming into today, if you get rid of this bar, you can see we have, last night I saw this TKO, and I think it just looks absolutely wonderful. Now, everything we just talked about, first of all, we have this acceleration of the trend. Not a whole lot of persistency back here, but certainly a trend. And then now we have a lot of persistency because you can draw a line through most of the bars. And then what do we have? We have a TKO, okay? What's the symbol? Well, I can't tell you because it's on my trading service for today. So I was kind of hoping it would trigger before the webinar, but it didn't trigger today. But you can see this is a live example, so maybe if Reed has me back a month or two from now, I'll show you what the stock is, and we'll see whether it worked or not. So again, this is kind of like the trend here. You can see the dotted line, and then it accelerates higher, and then the persistency I have drawn here with a straight line. And again, mathematically, that's equivalent to linear regression. And when you combine that accelerating, persistent trend with a TKO, it's just a wonderful combination. So this is going to be really fun to watch. I like to try to throw in at least a couple live examples, or at least tell you what I'm long, so we could watch these things develop in real time. A couple of notes on persistent pullbacks. This is one thing that's really beautiful about the pattern, is they're self-regulating. In 2008, and late 2007, I didn't see one persistent pullback on the upside. I saw a few on the downside, but not too many because you don't see a whole lot of persistent pullbacks on the downside anyway. But I couldn't find one on the upside. So that one pattern, just trading that one pattern, you would have beaten 95, 96, maybe 97% of all money managers who just kind of followed the market lower. When I say follow the market lower, stayed long and allowed their portfolio to nearly decimate by losing over half of its value. So there are a good pattern to trade. Last 3 months, I haven't seen any until and then now that the market's breaking out. Guess what? I'm starting to see patterns here again. It's a good place to start with. If you're not successful trading one pattern, you're not going to be successful trading 10. So I would recommend you start trading something simple like persistent pullbacks and become successful at that, and then slowly add to it. Now, let's say, God forbid, you get into a drawdown, you're not doing too well with your trading, you feel like you lost your mojo, then come back to something like persistent pullbacks. They're not going to come along every day. They're not going to come along in choppy markets. They're not going to come along as a general statement contrary to the trend. So there's a 90% chance that you won't be on the wrong side of the market, maybe even a 99% chance, because it'll be very hard to find on the wrong side of the market. If the market's an uptrend, you're not going to see any in downtrends. If the market's in a downtrend, you're not going to see any in uptrends. So they're very great in that they're self-regulating, and it's a great place to start, and again, a great place to come back to. So again, if I were just to trade one pattern, this will probably be it, especially combined with a TKO. And they're very powerful if you add in the persistency in the overall market and persistency in a representative sector. It doesn't happen that often, and I hate to say load the boat because I always preach keeping a constant position size as far as percent of portfolio. But as a figure of speech, you want to load the boat when you have persistency in the overall market, persistency in a stock, and persistency in the representative sector. So if you have all three things going in your favor, that's a good chance you can have a very good winning trade. That doesn't happen that often, and usually when it does, I'll write about it. But it showed the setup. But try to combine as much as possible. Now, what else is there? We just talked about two-month patterns. I have quite a few other pullback patterns. There's emerging trend patterns where, again, you're looking for a market to kind of bottom out and begin to rally off that low, and then you look to get long. Discretion can be very important, too. For instance, I had a stop in a stock at 9 that I recommended on my trading service. Well, the stock went down. It just barely touched the stock. It had 200 shares that traded at 9. I don't think I ever saw the bid drop below 9, and then the stock took off and doubled or tripled from there. So sometimes sometimes a little discretion can really help, but a little bit could just go a long ways. So not enough time to get into that today, but that's one of the details that's important with the methodology. And again, there's details, some other details in there. Stock selection is vitally important. I'm going to talk here just for a brief second about money management, but your best defense is often a good offense. Or if you're picking the best stocks to begin with, then you're much better off. This is why I spent 14 hours putting together a course just on that. I've gotten somebody today says, what happened? Somebody got stopped out 10 times in a row, but I've actually seen emails from people that have gotten that stopped out 20 times in a row. Well, there's two things they're doing wrong. One, their stops are probably too loose. And two, more than likely, their stock selection could use a little help. Now, if you don't want to go through a 14-hour course on stock selection and you just want to get started trading, then what I would recommend you do is just trade persistent pullbacks, because that's going to help tremendously in your stock selection. There's a lot of concepts to stock selection, but just that one concept is very important. It will probably put you in some of the better stocks if that's all you did was trade persistency. Okay, so what else? Well, money management is vitally important, and position management is vitally important. As I said earlier, position management, you're wanting to let that stock open up a little bit, that stop open up a little bit on your stock after you get to that initial profit target, and that's how you change the hats from a trader, a swing trader, from a trader to a longer-term position trend follower. And I have some YouTubes on that are out there. If you dig around a little bit, I'll give you the link here in just 1 second for my YouTube channel. You could take a look at those videos. So again, money management, very important. On any trade, no matter how great it looks, that little trade I just showed you, potential trade coming into today, I'm very excited about it. I think that it has the potential to double because I've seen quite a few other stocks double from that exact pattern. Some of those prior recommendations I showed you, it looks just like those stocks. I'm very excited about it, okay? But I know I could be wrong, so if I get triggered in, I will have a stop in place. Trading psychology, vitally important. I spent probably 15, 20 minutes. I just uploaded a video right before the show for today's, I do a weekly webinar, and in that webinar I talked a lot about trading psychology, and I do what I call a dead money report. A dead money report is where we have a stock, and let's say it goes up, and we make a little money or we kind of break even, and then it just does this for a while. Well, most people are inclined to bail out of the position, but a lot of times it's just kind of consolidating, and then the market will take off without them. And a lot of people don't have the psychology to sit through such moves. And there's a lot of other psychological issues, but if I had to kind of sum it up, the easiest thing to do to capture trading psychology, and again, I could talk for hours on this, and I often do, but the easiest way to sum it up is that you want to plan your trade and plan your trade and trade your plan. So have that plan in place. And as I said earlier, when I was talking about this dead money report, if your stop is down here and the market goes sideways, there's nothing to do. So if you're not stopped out, stay with the position. Next day, if you're not stopped out, stay with the position. And then if it begins to take off, then you trail that stop higher, and you just follow your plan. Okay? We have time for a few questions, I think. We've got about 4 minutes here. If you want some follow-up information, you can go to my website, davelandry.com. I have over 1,000 free videos on YouTube. I do a daily market in a minute where I have a little fun with the talking about the markets. I do a daily blog on my website. I have a lot of I do a free weekly webinar each week. So if you have any questions, you can come to the webinar and ask questions. As mentioned earlier, I have a stock selection course. I'll probably do a webinar soon again on IPOs because IPOs, we've been in this tremendous bull market in IPOs, and it's been just absolutely wonderful. And that's where most of the profits have been coming from for the last year or so. I did a course on IPOs last summer, and a lot of the IPOs that we ferreted out from the course have done incredibly well, and you'll have access to those. I also have a daily trading service, so if you're interested in that or anything else mentioned here, go to my website, and if you're interested in any of these other products, go to the store. So that's it. Any questions, I'll be happy to field those over the next. We have 2 or 3 minutes here, and let me see if I can see the actual questions. I don't know if Reed wants to ask them, or let me see what we have here. Okay. How much is the service? It depends on how long you're with the service. 1 month is, I think, is $197. 1 year is like $14.57. Right now, I have a special. If you get the stock selection course, you get an entire year to the service, and that's good for the next week. Thank you. Michael says, excellent presentation. Thank you. Can TKO be more than 1 day? Yes, you could. The TKO could be maybe in the second day of the setup. You might have stock might look like this. You might have this, and then the TKO move is on day 2 or day 3. So that's it. Yeah, see my store, Steve, for more information on the service. Throw us a bone. Okay. Yeah, email me privately. I'll throw you a bone. I'm in the process of changing my website over so we could do discounts and things like that. But if you want a couple $100 off a yearly service, no problem. Just say, hey, Dave, I was in the webinar for Investor Inspiration. Can I have $200 off? No problem. I have a $49 entry rate if you want to get in a little cheaper. What do I think about 50% retracements? I'm not a big fan of those because I think you're no longer have the trend once you give up half of the trend. What moving average? 10-day simple, 20-day exponential, 30-day exponential. John says, love your style, Dave. Well, John, I love you for that. AV, good. Thank you, Michael. Okay. Great job. Thank you. Okay. Thank you, Michael. Has the dollar topped out? I'm seeing some topping in the euro at this particular time. I prefer to focus mostly on inefficient markets, but yeah. No, I'm not a big fan of blue chips stocks. I think they're too efficient. Okay. U.S. dollar overvalued. Yeah, I think a dollar is another one of those bubbles. Okay, I agree. Best U.S. sector right now. Well, as far as a trending characteristic, I think the best U.S. sector right now is biotech and the semis because they've just been headed higher. We're long mostly biotechs and semis. Well, yeah, mostly biotech at this point. If you look at the webinar I did, it's on YouTube. It's the latest one. I just literally uploaded. You can see the actual portfolio there. Okay. Healthcare, absolutely. Healthcare is doing great, Michael, too. That's another sector I'm watching right now. As far as bottoming, I think the energies are bottoming. It's been more of a process than an event. Well, look, looks like my time is done. So let me go ahead and wrap things up. If anyone has any follow-up questions, I'd be happy to answer you personally. I do answer all my emails personally eventually. And any more involved questions, like if you watch today's webinar from the week in charts, you'll see that what I do is I'll actually take those questions and use them as fodder for my show. So if there's a more involved question that you have about the methodology, I will take that and I'll use it in the following week and make some slides and actually discuss it in a lot more detail. So if you see those shows, if you check out the YouTube channel and my website, all of this will make a lot more sense. I've been told to give away too much free stuff, but that's okay. I mean, that's, you know, I remember when I was starting out and looking for information, and it was very hard to find, so I try to make this very available. Okay?